The Rebel Capitalist Show.
Let's get back on topic with gold here. I listened to a Macro Voices episode the other day with Russell Napier, and they were talking about gold. Russell and my good buddy Eric Townsend. And Russell had a very interesting take regarding the supply side of gold that I hadn't really heard. And he was talking about how he thinks in the future, this ESG movement that now includes coal and maybe oil, nat gas, he thinks it's going to expand and become more broad to also include mining of precious metals. So he thought this could be a very strong bull argument as far as lack of capital going into find new mines or maybe to get more gold out of the ground from existing mines because of a perceived negative effect to the climate, carbon emissions, what have you. And therefore, that could really restrict the supply of gold moving forward. So if demand stays the same or increases because of this, we'll just call it money printing to use that term loosely, that could set up an environment where gold spikes higher, similar to what we've seen with coal or maybe nat gas in Europe. Do you have any thoughts on that?
That's really interesting, and I heard you speak about that recently as well. And the timing of you speaking about it and the timing of someone coming to our company and speaking to us about it was almost identical. Just a few weeks ago, we had a keynote speaker come and speak to our staff about responsible mining and responsibly sourced gold, because, this is something that happened in the diamond industry as well. A number of years ago where, Blood Diamonds, they made the movie with Leonardo DiCaprio, and then there was like a huge social uproar.
Right.
And this same trend is now happening in the gold space. And it actually kind of ties into what you're talking about. Some of the largest buyers of gold on the planet are jewelers, the Cartiers of the world. These are gold and silver buyers. Tiffany's, for example, these guys buy in, tonnage every year for their production. And they've already gone to the major refineries like Pam Swiss, for example, which is the keynote speaker came from Pam Swiss to talk to us. And they've gone to Pam Swiss and said, we will only buy gold from you that's mined from mines in Canada, for example, in the United States, where mining practices are at a much higher standard, but the cost to mine
is higher.
And the capital required to mine in those places is much, much higher than it would be in West Africa, for example,
right,
where traditionally a lot of gold supply goes to Europe and to the European refineries. So those big buyers have already started that trend, and the refiners are already creating the processes, including the use of the blockchain, to be able to prove to them that the gold is sourced from these mines. So it ties exactly into what you're saying now. He said the effect will be, I don't know about the effect on the spot price. You're probably right. The theory sounds good, but he said the effect on premiums for gold will be driven up, because obviously there's more of a cost to source and produce these goods for the refiner than there would have been previously, where they could just take gold from anywhere, the cheapest gold on the market, to do it. So he said expect premiums to go up, and he said expect this trend to continue in your market, in the gold market. So it sounds like finally us gold guys are going to have to get with the times and modernize and probably pay more, just like investors will for gold and silver.
What's the current production price on gold and silver? I know that's a really tough question because it's so broad, but maybe for that producer that you were talking about in Canada or the United States.
It varies. It can vary from mine to mine, obviously, and from region to region. And I'm not a mining expert, so I don't want to misquote. So I'm probably not the best guy to ask what current mining costs are in gold. I'm on the other end of the gold spectrum, at the other end of the supply chain, so to speak. So
okay.
I know that it's definitely a profitable undertaking at the prices that we're seeing right now. There's definitely nobody who's losing money at $1,800 an ounce.
Or $24, $25 silver, same thing.
Definitely profitable for the mines. Certainly. Yeah. There's going to be more exploration at these prices. Definitely. And supply is being flat, very stable. Supply for gold and silver is stable from year to year. So it's really external factors on the demand side that will create, a bull market for gold or a bear market for gold or silver.
Okay. So what do you think about the argument that crypto, or let's say Bitcoin more specifically, is taking capital away from gold? And if Bitcoin continues to do well, then that's kind of this kind of zero sum game mentality that if crypto's doing well, then gold has to do poorly.
Yeah, what a great question. And first, I have to start by saying I invest in crypto as well. So I'm a gold guy, yes, but I'm also a crypto guy. So I sleep well at night knowing that I own both. They actually, in my mind, they provide me with two different things. Crypto is kind of like an option on the future. Gold is like an option on the past and 6,000 years of civilization. It's trusted, it's well established, it's so ingrained in our society and our cultures. I don't think that's going away. So I don't think it's ever going to become a zero-sum game. Not to mention that central banks hold a lot of gold, and that isn't a position that they're going to give up easily. I mean, that's a bargaining chip at a very high level for these central banks and for countries when they go to the negotiating tables. But to answer your first question, is capital that previously would have found its way into the gold market going to crypto? Absolutely. Nobody can deny that. You know, it's true for guys like myself who sit on both sides of the fence, who invest in gold and invest in crypto. I invest less in gold now, probably because I invest a little bit more in crypto. But I think for a smart investor, it's not a zero-sum game. It shouldn't be a zero-sum game. If it is a zero-sum game, you're missing something in the argument. I think that you should own both. And if you look, what I've been doing recently, because I own both assets, is I look at the daily performance of the two, and I was expecting to see them correlate at like a high correlation. They actually tend to react differently to market movements. And I think it's because crypto at this point in time is still, for most investors, a speculative investment.
I agree.
When for gold, for most investors, is like wealth preservation. It's not a speculative investment. It's more of a mid to long-term investment. So they really play different roles in the markets. They have, people buy them for different reasons. And I think that's still true for most people, even though the media coverage of that battle would have one trying to annihilate the other. I don't really think that's how it plays out in the real markets, though, to be honest.
Yeah. How do you measure sentiment in the gold market or the precious metals market? Because I think that's, going back to our first thing we were talking about, the boat, everyone's on one side of the boat. So when you're investing in stocks or precious metals commodities, you want to be on the other side of that boat. So kind of fade the crowd. So how do you measure sentiment with precious metals so that you know when everyone's on one side of the boat?
Yeah, I mean, the indicators that I'll look at, there's some good studies that come out from the World Gold Council. If you can sign up for the World Gold Council's newsletter, they've got some good data for you, some good, kind of raw data that you can look at. And one of the things that I'll look at is just the ETF inflows and outflows. So they give like a monthly report if there was a net inflow, net outflow from ETFs. ETFs, in my mind, kind of represent the Wall Street interest, the institutional investor interest in gold and silver. I mean, they're trading futures contracts, they're trading paper contracts. It's not physical gold for the most part that's being traded. There will be some physical gold, offsetting these trades. Maybe not enough to cover all the positions, but that's another conversation for another day. But that's one indicator that I'll look at because that's one large segment of the gold market.
Okay.
Obviously, you have the industrial usage, which is more or less flat. It's pretty stable, so it's not something you have to pay too much attention to. But the other side is physical demand, which comes from the U.S. Mint, the Royal Canadian Mint. Obviously, our business, we know what physical demand is because that's all we do all day is sell physical precious metals. And I can tell you that ETFs have been net outflow as of late. But on the other side of that is an increase in physical demand. Physical demand since COVID, since that big bull run that gold had in 2020, has remained at about 80% of that level, which is still very, very strong. And in fact, it's interesting, the indicators you can use these days. We use our YouTube traffic, our YouTube video traffic, probably what you recognize as well. When we do almost exclusively videos on gold,
right?
That the viewership for the searching and viewership for videos on gold will increase as market interest in gold increases because people go to YouTube for everything these days. That's how they get informed.
Right? Yeah, I was going to say Google search, but I think that's even better.
Yeah, so we've seen almost a double in searches or views on videos in the last 30 days. So another indicator that demand is quite good right now and interest quite good, although gold took a pounding after they announced that Powell would be back for another term. I'm not even sure how that correlates, but
that's a really interesting way to do it. In fact, I'd be curious to do the same thing for the channels that talk about Bitcoin or that talked about crypto, because I've got a plugin for my Chrome browser called vidIQ. So if I just click on someone's channel, or like a video from like my channel as an example, if you click on this video on the right hand side, when you're in YouTube, you get all of my channel's statistics. And you get the statistics from the past month. So you can see if my views are up by 20% or down by 30%. You can see the same thing with the subscribers, the overall views. You can see a lot of data from other people's channels through that. And that would be fun to go through and take like 5 of the top gold channels and then 5 of the top Bitcoin channels and kind of measure market sentiment just through YouTube.
Yeah, I think it's a great indicator. You talk about sentiment is what are people thinking about? What are they craving? And content is where they go.
Yeah.
So I think for precious metals, probably the best indicator for a website would be kitco.com, because they attract a huge audience of precious metal enthusiasts and really rank highly in Google searches as well. Like they're top 3 in most Google searches. So that would be a great indicator for sentiment. Yeah.
Yeah. And I think you can go to a website called SimilarWeb. I'm getting that right, .com, and that'll tell you how many clicks certain websites get per month and like historic trends. So that's that's the insider tip of the week right there. A good one, Mark.